Welcome to this daily securities lending update from Data Explorers, looking at events in financial markets together with direct relevance for securities lending participants, both clients and practitioners. Yesterday was a day of extremes across all world markets, with record falls in stock markets around the world as concerns continue to grow regarding confidence in banks and general liquidity in the financial markets. As central banks rushed to try and shore up these markets, a number of factors also became quite clear that have some quite interesting knock-on effects to the securities lending markets. Liquidity, for example, continued to be extremely tight in both the US corporate bond market and increasingly in the US corporate commercial paper market. This has been an area favoured by the large cash reinvestment managers, who typically are managing large short-dated pools on behalf of securities lending clients. Now that they've effectively either stood aside or scaled back their activities in the commercial paper sector, this will certainly be one factor that's driving down a lack of demand for US commercial paper. This in itself is a potential manifestation of taking what's been, up until now, a crisis pretty much centred in the financial community around securities lending, and it's now moving into the mainstream financial sector, and that will have an impact on both ordinary corporates who try to fund themselves, and in due course this will affect pricing for financing, and that will have a long-term impact on the consumers of these various companies. The other thing that we've noted is lack of liquidity in the CDS market. Yesterday in North America, it was clear that it was hard often to get a bid for a CDS on a particular security. This again reflects general lack of confidence in bond markets and general lack of confidence in doing business on a counterparty basis. Specifically in securities lending, balances and available inventory for loan continue to show the gentle but definite downward trend we've noted over the past few days. Both are falling by about 1% a day, and the trend is likely to continue with further breakpoints anticipated, particularly around what's going to happen with the impending roll-off of the US regulations regarding the short selling of the 900 or so securities. These rules, I think, have already been extended. The current thinking is the rules can only be extended till the middle to the late October at the latest. Observers are beginning now to focus on what's going to happen in that market if short selling becomes available again to investors. It's quite likely that we could see a level of pent-up demand for short selling in those securities, which in itself may then dictate that the regulators have to act again to calm markets. So generally a very uncertain picture for securities lending markets, and in particular clients are beginning to evaluate how they've got through this recent period, what's happened to them during the recent liquidations of various counterparties, and this is leading many clients to consider a re-evaluation of the way they enter the securities lending markets and how they think about securities lending in general. I think that means we're going to see a period of pause. Many clients will potentially go out to RFP over the coming months, and I think that's going to be seen as a period of change within the industry. That's very much for the longer term, but right now it's all about liquidity, it's all about understanding the nature of the risks that people are running, and there's an increasing focus on understanding those risks within both clients and other participants in the market. As we look forward, clearly a period of uncertainty, we expect further volatility in stock markets, and that in itself will drive further uncertainties in the securities lending markets. Thank you.